Hey everybody, welcome to our Sunday afternoon session on raising money during COVID-19, after COVID-19, and if you're an entrepreneur fueling your company, how do you fuel it? What are the venture capitalists out there thinking? Who are they funding? What advice are they giving? What are they seeing? The old adage, no bucks, no Buck Rogers. Is that still true? And where are you getting your bucks right now? So super proud to welcome my Abundance 360 members from around the world, our Abundance Digital members, and those of you on Facebook, on LinkedIn, on YouTube, on Twitter. We'll be taking questions first from our A360 active members, and then from our digital members, and then from the world. So let me welcome three friends, first and foremost, and venture capitalists who I'm proud to call friends and work with. First, let me introduce Timur Butrascali. Full disclosure, I'm a founding partner of Bold Capital. Timur is managing partner. And I'll come back, Timur, to let you introduce Bold Capital, your background for 30 seconds. Dakin Sloss is the founder and managing partner of Prime Mover Labs in, where are you today, Dakin?
I'm in Jackson Hole, Wyoming.
Jackson Hole. And another friend, Courtney, who is the co-founder, managing partner of M13. Hey, Courtney.
Hey.
Good to see you. All right, so let's begin by knowing who we're talking to. And I'll ask each for just a quick overview, 30 seconds, no more than 60. Timur, please kick us off.
Sure. Thank you, Peter. And thank you for putting this together. We have a family of early stage funds. And as Peter mentioned, Peter is co-founder and one of the partners. We tend to look at life sciences and frontier tech. A lot of what initially are crazy investments, and then with time, they seem to look quite normal, which is sort of hopefully that's sort of a positive. Myself, by training, I've been in the venture business for the last 30 years. I've also been an entrepreneur, built 3 companies. Really enjoy the process of supporting entrepreneurs. It's a 24/7 for the entrepreneurs, and understand both the excitement and the challenges that they face, having been on both sides of the fence.
Timur, one last data point, which I'll ask everybody: the size of Bold Capital and the average ticket size. What phase is Bold Capital investing in?
So we have 225 plus under management. We're in the middle of raising another fund, which will add 100 million for more targeted towards growth investing. The 225 that we have is for early stage. Ticket size, we'll invest as little as $500,000 in a seed investment. And cumulatively as much as 10 million in any given investment. And
Wonderful.
then the sizes are in between those numbers.
Dakin, Prime Movers, tell us about the fund and you.
Peter, thanks for bringing us together, and glad to see everybody. Prime Movers Lab invests in breakthrough scientific inventions that have the ability to transform billions of lives. A lot of similar spaces to what Timur was talking about. A few of our companies include the first in-space transportation provider, a coronavirus diagnostic and vaccine, Peter, that you're a co-founder of. We've got industrial solar heat that's making it possible to, cheaper than natural gas, provide heat to industrial processes, a whole range of things like that. And our first fund was $100 million. Our second fund is about twice that size. And we usually invest anywhere from $2 to $5 million to start. And then we can size up to $10 to $15 million as we grow the company.
Wonderful. Thank you. Courtney,
yes.
M13, please.
Thank you. Courtney Reum, my brother Carter and I originally started a firm called M13. Now we have a bunch of other incredible partners. We like to call ourselves a venture engine, which is a little bit of a twist, or we'd like to think an evolution on a traditional venture capital firm, because for us, it's we certainly function as a venture capital firm. We also have a brand studio that we call our Launchpad, and then we're organized a little bit different than a regular venture capital firm in that we have about 30 employees, and about 2/3 of our employees work cross-functionally on both our fund and the brands that we start ourselves. So little different lineup, but we have about 6 vertical sector expertises, everything from data, and then more obvious things like talent operations, brand and comms, things like that. But really, you know, almost everyone in our firm has been an operator at some point. So we really like to consider ourselves, you know, kind of by entrepreneurs for entrepreneurs. Currently have about 300 million under management. Just raised our most recent, our second fund. It's about 200 million. Check size, we definitely aren't afraid to go upstream. So at the smaller end, probably 500K, but have written checks as big as 10 million. So sweet spot would probably be, let's call it about 5. Goldman Sachs investment banker turned entrepreneur. My brother and I's first venture was the first organic and sustainable spirits brand called Vive, which we sold 4 years ago, and have started a couple ventures since.
Awesome. So for everybody watching, all 3 companies are roughly in the same category of doing some seed into Series A and follow on into Series B, from a few $100,000 up to single-digit millions, maybe up to $10 million. So we're going to be going a lot to your questions in a little bit, but let me just kick it off, which is we're in the midst of the coronavirus pandemic. Everyone's home. Let me be blunt in saying, are you still doing investments now? And are you getting, you know, I'm assuming you're not doing in-person pitches, receiving in-person pitches. So it's now over Zoom. And, you know, I think this is a question, Courtney, that you and I discussed. Would you ever imagine that you're going to have making investments without ever meeting the entrepreneur in person? And I know everybody has a different answer to this one here, but let's, are you making investments? And talk about, what it's like to make an investment over a Zoom pitch, if you would. Courtney, is this something typical for you or unusual?
Yeah, we are certainly making investments. I should have probably mentioned at the top, we do all consumer technology. That we have kind of a purposely broad definition of that right now, but we're certainly open for business. I would say it's also a good time to be patient. We've only deployed about 20% of our 25% of our new fund. But we have been open since, the day COVID hit. We did just write our first check in the last couple months, more a function of I think there's been a little lag between maybe some valuation, not resets, but just pullbacks a little bit and where the market's at. So we're being patient. But the company that we wrote our first check in, I never thought I would write a check without ever having met someone in my firm. And so just did that. And we've actually hired 3 people since March that I have not met in person. So that's a first as well.
So Dakin, the answer is a little bit different for you. Talk about that.
Yeah, I mean, I've been running remote organizations for about a decade. And so I've cut a lot of checks in the life of Prime Movers Lab where I haven't physically sat in person with someone. I probably have spent, like we all are doing, like 12 hours a day on Zoom for the last 10 years, though, not for the last 3 months. And so our process is built where we have 10 of us spread around the country. And usually someone will end up running into the person in person when this is not going on. But we've deployed over $10 million across 4 different companies in the last 8 weeks or whatever it is, and whatever it's been since COVID struck. So this has kind of been business as usual for us. And I think the nicest thing is, as we've been meeting with LPs, we've stopped getting the question, how do you run a remote venture capital firm?
So I mean, a quick follow-on for you, Courtney. I mean, for Dakin. Any advice for people pitching over Zoom? Because that's been sort of like a consistent for you, and now it's unusual for most firms. So, but it's not been for you. So what's your advice for an entrepreneur?
I was on a call with someone the other day, and they were talking about how they're still uncomfortable on Zoom. And I was kind of trying to go back to that place of not being comfortable on Zoom, because I think I've gotten so comfortable on Zoom, I may be more comfortable on Zoom than with all the in-person meetings. And what I realized is there's a few little teeny things that I do. One is if there's multiple people in a conversation, I'm always on gallery view rather than speaker view. So I'm able to kind of see and read body language for all three of you right now, for example, rather than just being focused on one person. And I'm still catching all the subtle clues that if we're all sitting in like a conference room and talking, we're not just usually looking at the speaker, we're seeing how are other people reacting so that we can build our response. And we're playing well with the overall dynamic of the group, not just a person. The second thing is I actually never have my self view on. So I don't see myself. Like if you're in an in-person meeting, you don't see yourself. I think a lot of us have gotten used to seeing that little box like up at the top. And I think it's really distracting to look at yourself, because then you start having these like self-questioning thoughts, self-judging thoughts, rather than just being totally focused on how is this being received by the other person.
And then how do you feel about when someone puts on, sort of their virtual background if they're pitching? Are you good with that?
That's pretty good, Peter.
Yeah, listen, Timur, you've got a PhD in physics from MIT, so I figured.
No, that looks familiar.
There's an answer to this equation.
I decided to throw my nuclear fusion one on for this. To be candid, I probably prefer not to see the virtual backgrounds. Before all this COVID stuff was happening 8 weeks ago, like nobody was really using virtual backgrounds. Not many people were, but it doesn't matter, right? The only thing that's weird is, right, with the Zoom is not quite good enough yet. Like as I sway back and forth, you're probably like seeing little blips of thing come through, and that's like minorly distracting. So, but I also understand people are in home offices that weren't designed to be home offices right now, and they may have a request from their spouse that like the messiness behind them isn't shown.
Timur, first question is Bold deploying capital right now? And what's your advice for entrepreneurs pitching over Zoom?
So the answer, yes, we're absolutely deploying capital. I would be lying if I didn't say we've got 55 companies between both of our funds, and obviously making sure that those 55 companies are in good shape over the next year to two to who knows, sort of 3 years, is an imperative. So that's probably, that occupied a big chunk of April, May. I think now that things have settled down, we are very much back in looking at companies. As to Zoom, I've already noted Dakin's comments. I am now on the sort of group look as opposed to the singleton, the gallery. So that was actually quite helpful. I would say that I don't know that I have so much any suggestions, but I think it is like there is a generation which wasn't used to purchasing on Amazon. And now all of a sudden they realize, oh my God, I just click on it and it arrives at home. I think there is that same in an enormous number of activities where you're realizing that the alternative is, in some instances, not just as good, it might be even better. And so, yeah, there are sort of things that you don't get with a face-to-face interaction. But I think if I compare this to video conferencing 10 years ago, this is like nirvana. I mean, this is extraordinary. I mean, you can see people's expressions. It doesn't break down. You can have a conversation. So it's a real example where tech is at a level which makes it, I won't say the same as being in the room, but pretty damn close.
So a couple of questions right now, and we'll go to group questions in a second. We've got a few that I have opinions on, but I want to hear yours. Is now a good time to start a company? What are you looking for in a company now, right now, during COVID-19 period, and in the next few months? What is it that would get you to invest in that company versus in general? What parameters are you looking for? Dakin, start with you. Now a good time. What you're looking for in anything you're investing in? Different now than before.
I think it's a great time to start a company. I think it's important to be able to speak to investors about how does this company benefit from what's going on, and that's always true. You always need to be able to speak to kind of what are the current trends, what are the current things that are happening in the world, and how are you capitalizing upon those. For us, I think the things we're investing in haven't really changed. We're investing across energy technology, we're investing across infrastructure, manufacturing, the future of computing, human augmentation, things that are all, if anything, highlighted more as needs right now, whether it's things like the coronavirus diagnostic and vaccine we talked about, or we just recently invested in a climate change company related to carbon capture, or we're looking at something in the longevity space that we've talked about together, Peter. I think all these things are still things of the future. Personally, I want to make sure not too much of our creative energy and resources gets caught up in paying attention to coronavirus and distracted from some of the big long-term challenges we face as a civilization. So we're not trying to redirect too many resources away from what we're already doing.
Same question. Any different answers, Courtney or Timur?
I would say no. I'm the eternal optimist as an entrepreneur and a venture capitalist. Always a good time to start a company. I would never discourage anyone from doing that. As I said, with us doing a little more consumer tech, we are always targeting consumers' discretionary income, and that's a huge part of wallet share for our general GDP. As Dakin said, I wouldn't be so focused on the short term. Who knows where that goes in the medium or long term? But I'm really excited for someone to start something right now, because I think although there's still a lot of dollars out there, I do think a little bit of some of the funny money will probably go away. So if you're someone that gets people's attention in this climate, it means you really have something compelling. And if you break through, it probably forces you, maybe not on the ideation, but on the execution, to be extra disciplined, which will never hurt. I mean, we're all investing in growth, I believe, but it doesn't hurt to be able to trim the fat right from the start and really be focused. So I think just like funds usually perform better after some kind of downturn, I think a lot of the greatest businesses usually come out of a kind of a moment like this.
Timur, any different?
I think I totally agree in that periods of difficulty tend to bring the best out of entrepreneurs, or at least the ones who truly have a belief. If you are passionate about what you're doing, sort of these brick walls that come up, this is just one of a whole bunch that you're either going to kind of slam through or decide to go around and figure out how to go around it. I mean, if I look at the 2008 period, Venmo, Slack, Uber, Square were all founded at the peak of the last black swan. I think the one thing that I would add to the general passion, dedication, and all of that we look for in entrepreneurs is as Courtney says, just in your enthusiasm, also an ability to be realistic about your milestones, the fact that you won't be able to raise money as easily. I mean, there's no if, ands, or buts about that. So you had better be delivering on those milestones. You had better be fairly clear. If you don't achieve your milestones, it's not the end of the world, but at least understanding why and being able to articulate that to an investor, I think always important, doubly important right now.
Let me hit on that. I had a question from a dear friend, technologist entrepreneur Harry Clore. Like, how important is revenue right now in a tech startup in particular? And part of my belief is that it used to be that we're living in a time where I could have to raise tens or hundreds of millions of dollars before I would get to revenue. And I think those days are over. I know when I'm looking at an entrepreneur or a company, I'm like, it's great to know you can have billions of dollars in sales, but I want to see revenue as soon as possible. And I want to see you cash flow positive as soon as possible. And I'd rather be putting my money into growth than, R&D. How do you feel about that?
Yeah, I mean, for us, we're always looking for companies that are at that inflection point, have created that core intellectual property that enables that huge opportunity and are just starting to commercialize. So that hasn't really shifted for us. I mean, out of the 4 companies that we've closed on in the last 8 weeks, I think all 4 of them have had 0 revenue. Many of them have, within the last 8 weeks, substantially increased that revenue. And that's generally the time that we like to enter a company. I think you are right, Peter, about the broader market. If you're going to see a lot more people focused on revenue from an investment perspective that previously were kind of comfortable letting it ride for a while in the pre-revenue stage.
Yeah.
Well, Peter,
Sorry,
go ahead, Courtney. Well, okay. I mean, Peter, as you well know, I think the answer depends. We have companies in our portfolio which are such breakthrough technologies and truly disrupt markets. Yes, it's great to sort of have revenues, but in some instances, those companies, and the extreme is a molecule which gets into phase 2 trials, it's got 0 revenues, pharma or a biotech will buy it for a ton of money. The same in medical devices, the same in diagnostics and so on. There are plenty of instances where you can have significant exits if there is IP and it could be FDA clearance, it could be FCC clearance, what have you. Now, having said that, there are also another family of companies where revenue is really the proof that the dogs will eat the dog food. And if you don't have that, people just won't give you the money. So I think it depends on the sector. But in the ones where you're in essence going to get an exit based on multiples and so on, yeah, for sure. Revenues are even more important.
We're going to be going to everybody's questions in a second. I've got my team monitoring everything, and so get those questions ready. Just real quick, outlook for debt capital, IPOs in the near term, exits and such. Any initial thoughts, that might be different? Don't need everybody to answer, but anybody have an opinion about that?
Sure.
I'll go. Let Courtney go.
Okay, sorry.
Go for it.
I think for us, I think we're just kind of assuming anything that we thought could be an exit or M&A candidate, maybe wait a year or 2 longer. We're making sure they're capitalized for that. I think for consumer tech IPOs, some of the ones that happened even before COVID haven't had the greatest run. So I think they just have to be very careful. But we are looking on the debt side, we're looking at a lot of great debt options because obviously money is still very inexpensive. And there's a lot of, creative venture debt solutions, or there's groups like a ClearBank, if you're an e-com focused company that will fund your revenue stream off your e-com spend, or a lot of great debt solutions. So we're pretty bullish on a lot of those right now.
Timur?
IPO, I don't have a clue. M&A, we're actually seeing a fair amount of activity, which surprises me. I mean, a lot of companies are being fairly aggressive. Now, I don't know if that's because they feel that they can get things at a better price, but you can't take away the fact that the global 2000 are sitting on more money than they've ever sat on at any period that we can think of. And it's, fine, you can do that amount of stock buyback and but eventually you need to do things which will grow your companies, and M&A into new tech is for sure one of those areas.
Awesome. Okay, let's start getting to questions. Jerem, you're feeding me questions from our different sources here. Why don't you jump in?
Sounds good. Our first question is from an A360 member, Matt Gott. He's asking you all, are you looking at the space industry? And are you looking at established companies or previously dominant companies when thinking about the post-COVID world?
Yeah, I'm happy to talk. One of our portfolio companies is a company called Momentous, which is the first in-space transportation company. And they basically use water as fuel to be able to move things around in space and make it possible to do ride sharing for the first time. And we're actively looking at a bunch of space opportunities, everything from space mining to solar in space there's lots of cool stuff that it's going to really change how we think about what our ecosystem and our planet Earth is. And we tend to look at companies that are at the very early stages rather than companies that have kind of been around a while and are readjusting, if I understood the second part of the question.
That sounds good. All right, Jerem.
All right, we have another A360 member here, Kyron. He's wondering what you all think about the real estate market and what the best way to raise investment for that is.
I'm gonna jump in here. I think I think myself personally, not from a venture capital side, I think there's a lot of personal money looking for value investments. Some of the advice I've been thinking about, we're going to see a real decimation, I think, commercial real estate and Main Street real estate. And I'm looking at deals, how those things get converted into multifamily housing. How do you go from what was Main Street storefront to, okay, that's a nice condo to live in now, or when Macy's goes out of business, they're going to see a lot more decimation of retail, I think, over the next 3 or 4 years. How do you turn that? One of my favorite ideas is I'd love to see the creation of live workspace, right? Where you start a company, you've got 20 employees, and you move in to a place that's, living and working and, shared, sort of, I call it a capitalist commune. So, conversion of volume into different uses. Are you guys looking at real estate from a venture side at all? Anybody?
Yeah, we are quite a bit, just because, again, as I said, the lion's share of our dollars go into things consumers spend money on, and housing and real estate is up there. So I'm actually pretty excited about the future from a real estate tech point of view. As an example, to kind of piggyback on what Peter said, we're invested in, say, a company that's early stage, but we're excited about it, called Doorstead, where if you have a multi-tenant building, they'll actually use data and the learnings to actually guarantee you a certain amount of baseline level of dollars for the building based on level of rent. And so if we can get smarter with the algorithmic stuff and the data learnings, I think that's a great way for someone to A, know the value of what they should be charging, and B, kind of hedge their bets when someone comes in and says, we'll guarantee you floor in exchange for managing it. That's the kind of technology I'm excited about.
Jerem.
All right, another A360 member is up next. It's Mel, and she's asking, how do you all think about fundraising models that aren't predominantly exit-based?
So, good question. So instead of that, paying out dividends, I guess, is your alternate. Do you invest in companies that are highly profitable and might pay out dividends, or be?
So let me take one go at that. And I think it's very much a function of the class of investors that you have. So, for example, we have a number of foreign investors who do not pay capital gains, do not pay taxes on capital gains for US-based companies. They would have a whopping tax bill, or potentially a whopping tax bill with a dividend payout versus a capital gains exit. I mean, it depends, and there are ways of structuring it. So I think that there are efficiency questions depending on your investor base, which make the capital gains model typically more efficient. Because the classic example is it's much better if you're an individual investor to invest in an LLC, because you can capture the losses of the LLC as it goes along. For a VC, that's not a particularly good, I mean, I won't go into the reasons, but it's not particularly effective, and it's a tax-related issue.
Anybody else?
So I think, yeah.
Dakin or Courtney?
Yeah, I mean, in general, if we had a company that was just minting cash because of the way that we're structured as a venture capital fund, we would want a larger company to buy that company. It's just the tax efficiencies work out like Timur was talking about for most LPs in typical VC funds.
Thank you. Jerem, next question.
All right, our next question is also A360 member Bill Fisher. He says, I see our current situation as a chance for reinvention, for questioning the old playbooks and opening up new ways of living and doing business. What new ways of interacting do you all think will come from this epidemic? What are businesses doing to help them grow and prosper in the coming years?
I'll jump in on this and say that I think we're going to see the dissolution of offices to a large degree. I think a lot of the companies I've invested in or part of are getting rid of some, or in some cases, all of their real estate holdings. So tech that allows companies to operate diversified. So we see Slack and Zoom, but that's just the beginning, right? We're gonna have a new generation of Wi-Fi coming out, 5G, VR systems, and so forth. So I'd be investing in those sorts of capabilities. What else, guys?
I think a good example is telehealth. The demographic which is most uses healthcare is obviously 65 and over in general, and that would have been a demographic which is less prone to just get onto a computer and or your phone or whatever and deal with a doctor. Now they're forced to do it, and again they're realizing, oh my God, there is a level of convenience here. Yes, eventually I may need to go and get that MRI or what have you, but even that, I suspect, you'll see changing, where you will have diagnostics and medical devices at home, where 80% of what a doctor needs to do when you go in for a doctor's visit can be done at home.
And one of our investments, Timur, Open Water, Dr. Mary Lou Jepsen is basically using red laser light and an ultrasound. Her idea, instead of a mammography in the future, is you get a box that a woman wears as a bra, and it basically images, it goes into the cloud, and then you send the imaging system back to the office.
Yeah, same for echo or ultrasound device, same for, I mean, we have a litany of companies which are disrupting diagnostics in the healthcare space. You add telehealth to that, I think you're going to see a dramatic shift in that industry.
Yeah. Anybody else want to add anything on that one? We got a ton of questions coming. So, Jerem, next one.
All right, up next is Laura, and she's asking, how much and in what ways has COVID-19 changed how people pitch to investors? What elements have you changed in your evaluations, and what gets noticed in this environment?
And I'm going to add on to that, Courtney, a question you teed up for me, which is, are there any deal breakers when you first meet someone? I love that question. So.
Well, I'll tell you that, yeah, it's, so I think what's changed for me is that, yes, we have, at least for us, we made the decision very quickly. You're going to have to get investing in someone you might never have met. So what's that do? You have to feel some, if not affinity toward them, at least, passion over Zoom. So to the question earlier of Zoom hacks, As we say in Hollywood, the camera adds 20 pounds. I've heard that Zoom adds 50% of your energy. And I think it's kind of true if you don't know someone. Like, I know Peter really well, so I know there's no shortage of energy there. If you had never met Peter, you have to make sure you get that across the first time you meet on Zoom. So I think it's not, you got to make sure you're not someone you aren't, but I think just making sure the passion, enthusiasm for what you're doing comes across. And I would say the other thing that we've really upped is the reference checks. Because when you haven't met someone in person, luckily we live in a world where it's the 4 degrees of Peter Diamandis. So like you can find out someone who knows someone pretty easily. So we've upped our reference check game pretty heavily in absence of meeting someone in person and feeling that. And then I think for deal breakers, it was my own question. I don't have a great answer, except for that you'd be surprised the things that people do over Zoom when they don't think you're watching, and just the little things where I'm being pitched by a team of 3 co-founders, and like halfway through, one of them is turning off their video and they're clearly like texting the whole time. And I'm like, do you not think I can see it? So I would say it's just the little common courtesies that we still think that, we take for granted. That's probably my biggest one. That's Zoom versus in person.
Courtney, great points. And I really want to say, I walk away from a day on being on Zooms drained. And I realize a lot of it is because I've got to add extra energy in that conversation for it to come across as normal even. And so it really is. I mean, it's important when you're pitching on a Zoom, the passion's got to be there, the connection's got to be there. And by the way, one of the things, don't look at the screen, look at the camera, right? If you're looking at a person's eyes, you're looking at the little green dot on your Mac instead of, down at the person down there. So consider those things when you're doing this.
Yet another one that I have to make a list of.
Look at the green dot, make eye contact with the person you're speaking to. It's not down there.
I'm gonna add one more.
One
of the ways that makes it easiest to give energy over Zoom is to be standing. So I don't know the last time I sat down like during a work day.
Awesome, dude. Thank you. That's one for me. I love that. My office, I've got a walking desk, which I so damn miss right now. Okay, Jerem.
All right, we have 2 questions, one from Ode and one from Jennifer around nonprofit funding. So she's wondering if you can explain how the process of fundraising differs between a nonprofit and a for-profit, and how should you think about approaching a pitch for each?
So let me take that, since I have, at least 8 nonprofits under my belt. So first of all, for a for-profit organization, you are selling ownership in your company, some percentage that you negotiate with one of these gentlemen on this phone call here. And you have the potential for selling your company. For a nonprofit, nonprofits typically are not, you don't take any ownership in them, and there's no exit to be sold. You're basically, you're pitching someone for their support, to give you capital, which you can write off your taxes. And it's a passion pitch versus a greed pitch, to make it as blunt as it can. Please support my nonprofit cause because we make the world a better way. We're gonna get rid of this evil, whatever the case might be. We're gonna help this population of underprivileged and such. Let me just hit one point. I am done starting nonprofits. I'm done. You heard it here, I'm done starting nonprofits, because I think that there's advantages in being able to solve the problem you want to solve with a great business model. Because when you start a nonprofit, you're for the rest of your nonprofit's life pitching for donations. There are probably some categories which are really need to be just nonprofits, but I would say that, in some cases you can create the impact, the positive ecosystem by creating a business model that in the business model's wake makes the world a better place. I don't know if anyone wants to add anything to that. All right, Jerem, next question.
So Mars notices you guys are all focusing on venture capital. Do you have any thoughts on non-VC ways of fundraising, e.g. seed, angel, friends and family crowdfunding, etc.? How do you know which option is best for your business idea?
Who wants to take that? Dakin?
I'll take the first step.
Courtney.
Sure. I think so. About 2 years ago, we wrote a whole book called "Shortcut Your Startup" that kind of goes in progression, but that's the first question you need to ask yourself. And to the question earlier about a business that wasn't necessarily looking to exit, I think that's a good time to be asking yourself: is venture right for me, or should I be looking at different methods or family offices or groups that tend to be more patient? The good news is, it is certainly not easy to raise money, and it won't be in this climate, although there is a lot of money still out there. Having said that, there are infinite number of ways to raise money versus 10 years ago, such as crowdfunding. So would have to know more specifics about the business. But if I was starting for something from scratch, I would be looking at all those along with venture before I made a decision.
Yeah, if you're looking for something, I wrote a book a couple of years back called Bold: How to Go Big, Create Wealth, and Impact the World. It was the name we used for the venture fund. There's an entire chapter, well, there's a few chapters on fundraising and one on crowdfunding. In that, crowdfunding is making a huge impact on the planet because it's democratized and a meritocracy, right? You can raise capital as we connect the entire planet, all 8 billion people. You can have a great idea someplace on the planet and get crowdfunding, and there are different flavors of crowdfunding available to you. There's more capital available in the world. It's slowed down a little bit now, but there has been than ever any time in human history. Timur, you're going to add a point?
Yeah, it's a slight sort of addition in the sense that if you're talking about the kind of deals that we predominantly invest in, then that's one thing. But I've sometimes had situations where entrepreneurs come with a company, which is a great company, but for argument's sake, is not going to be worth more than $50 million at exit. If that's the case, that's just a bad candidate for a venture funding, as an example, because if you can manage to retain a significant ownership of that $50 million company, let's say you retain 80%, my God, I mean, 40 million last time I looked, that's a lot of money, and that's a wonderful exit. If you go into the venture cycle, assuming you would find someone who would finance that, you're going to end up owning 10, 15% of the company by the time the dust settles. The odds are. I've had people come to me with companies like that, and I've said, look, my advice to you is find other sources of funding, because the venture model does try to go for these outsized outcomes where the entrepreneurs can do fantastically well, as can the investors, but you need large numbers.
Yeah, I think one of the things people often make a mistake on when starting a business is not knowing what their outcome is. You need to know, is this a business that I'm trying to build for a big exit? Is this a business I'm trying to build for a small exit? Is this a business I'm trying to build the cash flow? Is this a business where I don't care what the financial outcome is? I'm just trying to accomplish a mission in the world. And based on what your answer is to those, then you can determine the appropriate source of capital, or whether even outside capital is appropriate. But often people get caught up in their passion for something, or their desire to copy what other people who seem to be successful are doing, rather than actually like thinking through, okay, cool, like this is going to be really fun and exciting, and there's an outcome. What is the outcome?
And by the way, guys, just for those of you who are just getting going as entrepreneurs, there's another kind of company. It's a company that is based on your hard work and maybe some capabilities you have, and it's your investment is your time and your money, and you own 100% of it, and you start doing something that makes revenue on day one, and you grow it on cash flow. And for when I've done that myself, that's been my favorite experience, to build a company that's cash flowing positive, that I don't have to raise outside money for. That's a beautiful thing if you can do it. Please think about that.
Yep.
Next question.
Can I say two small things? Can I say one small thing on that? Two small things. I think Dakin makes a great point, which is that it's a nuanced point, but to me, always know what your end game is when you start. And it's not that you have to declare I want to sell it the day I start it, but you have to say, if I want to have the option to sell it, I probably have to make most decisions with that in mind. Doesn't mean you have to do it when the day of reckoning comes, but you have to approach it with that view, because if you don't, you won't have the choice when the day comes. And the second thing I was just going to say to your point, Peter, is probably my favorite chapter of the book that we wrote was called Know If You're a Sailboat or a Speedboat. And for anyone that's new to the game of starting stuff, I want to just point out that everything you read about, every company, every Airbnb, every Uber, Lyft, whatever, insert fast growing unicorn, those are all speedboats. And as Peter said, many of the best companies are sailboats, but sailboats, don't run on gasoline, AKA venture or other dollars. They take time. You catch a gust of wind, then the wind dies down, and you wait patiently. You have to. That's what 90-something% of companies should do. So just food for thought.
Yeah, and Courtney, let me just add, this past January at Abundance 360, I had two friends, Joe's co-founder Airbnb, and the founder, past CEO of YouTube, there on stage. We're talking about what it was like, and the challenge is that most of us see these amazing companies, right? And we don't realize that they're overnight successes after 11 years of hard work. And they've had multiple near-death experiences. All you see is like this massive, IPO and exit. None of that is. There's very rarely do we ever see a company that goes from an idea to massive success. All of these companies have had a decade plus of hard work and near-death experiences. Whether it's Tesla that almost died a number of times, or SpaceX, or God knows. So don't fool yourself. You have to love being an entrepreneur, and you have to do something you love. Do not start something just to make money. That's the wrong thing. You should start a company because you're passionate, you love it, you want to use that company to make a dent in the universe. Super critical. I think all of us agree on that, right?
Unless your passion is just making money, which it is for very few people.
I think it's empty, because you're going to hit bumps in the road, and if that's your passion, there's not going to be the emotional energy inside you to wake up that next day and keep going till 3 a.m.
Definitely.
Next question.
All right. Next up is Henrik. He notices that the immediate future for apps is platform-based. Do you all have opinions on platform funding, and how do you think about the valuation of platforms?
I think platforms are, old adage from Google is a platform play floats all boats. If you can build a platform that allows entrepreneurs to make money on your platform, YouTube, the iPhone, all of those things, that's amazing. But it's not. Don't force yourself. Don't bullshit yourself.
I will say, I don't know about specifically for apps, but platforms in general, yes, they have the highest returns if they're successful, but they're also the toughest to execute on. I mean, you're asking people to accept your platform as, in essence, a standard for a lot of applications. That means that your platform has got to be robust in God knows how many different instances, as opposed to having honed it for one specific instance, which means it's a very high risk venture, but also potentially the highest return if it gets accepted.
Yeah, I mean, our company is actually, as I said from the start, we call ourselves a venture engine, but we're actually set up as a holding company or consumer tech platform. So we're positively biased toward them. But when it relates to products, just don't lose sight of the fact that it's great to say you're a platform, but they all need a hero product or a hero use case. So a platform of a bunch of mediocre things is not a platform. That's just a collection of things that probably isn't going anywhere.
Yep.
Awesome. Up next is Yoav, and he is noticing that the K through 12 education technologies, or those companies, have not enjoyed the attention of investors in recent years. Do any of you think that the coronavirus will change that? Will the move to work from home and learn from home have an impact on the funding of educational ventures?
Yes, yes, yes. I mean, I can add to it, but I mean, I think it's the same as telehealth, where people will find ways, whether it is VR as an example, where you're going to create environments where you can have virtual classes and actually interact with other people in those classes. As what's the Steven Spielberg movie? That came out about a year ago, where you're spending your life in this virtual world.
Oh,
Ready
Ready Player
Player
One.
Yeah, thank you. I mean, you're going to have things like that targeting education, and there will be a big impetus for those kind of things.
Sounds good. Up next is Perry. He's wondering for all of you if you have companies who invest overseas, and how do you all see the US as being different from other countries when it comes to venture capital?
Interesting. That's a big question. We do have a global audience watching this. So thoughts?
Yeah, I mean, as a fund, we generally invest in U.S. companies rather than international companies, but most of our companies have some amount of business going on elsewhere. We actually, Timur, we're together in an electric autonomous airplane company that's doing stuff over in New Zealand. Peter, we're in a company that's doing stuff all over the world. I think there has to be a very different business development approach in each of these places because there's different cultures. I think one of the things I'm most curious to see is how will those cultures differently adapt? You know, for example, the Middle East is known as a culture where you have to meet in person many, many times to get anything done. I'm going to be very curious to see if some of that shifts, since some more stuff is getting done over there right now over Zoom at the moment. I think you also have to have very different, structural approaches as you go into different markets. There's certain markets in the world where it's today, and it's going to continue to be for a period of time, that you need a local partner who knows that market, who is familiar with that market, who really takes a big chunk of your ownership in a local entity that goes into that place, whether that's the Middle East or certain markets in Asia, because you just can't get through the bureaucracy and through the stuff that's in the way of making a business work without having somebody who's got the relationships to kind of navigate those waters.
I mean, sorry, go ahead.
We too are pretty U.S. centric, but we're open to rest of the world. We have made a couple of investments outside the U.S. We made an investment in a company we're very excited about called Bunch around workforce engagement that came out of Berlin. And so we spent some time there, and I think we thought, oh my gosh, there's all this stuff going on in Berlin we didn't know about. Let's spend more time here. But it is just hard. You know, you have to decide, is $1 in Berlin better purpose dollar in LA or New York or a market we know better? And what it comes down to is there's so much innovation going on everywhere that I think we naively for a second thought that we could be a bigger player in Berlin than we thought because we didn't realize how much was going on there. And so to Dakin's point, you really need local partners, local knowledge. And unless you're really willing to spend time there, that might mean something different in the new world here. But to spend enough time there, it is hard.
Yeah. Jeremy, next question, please.
All right, here's a question from social media. How do you all look at investments into startups supporting the effort of reopening businesses post-COVID? This person's thinking about things like temperature scanning for restaurants, et cetera. Are you all watching any technologies in this space?
Yeah, I mean, listen, entrepreneurs are defined as individuals who find problems and solve problems. And the only challenge, of course, is the problem going to be around for a while to build a business on it, or is it a flash in the pan? And, or can you capture customers' market share and then evolve into different elements in that? So I love investing in companies that have near-term revenue engines and a massive upside after that. Okay. All right. Next question.
Sure. Here's another one from social media. What are you all most excited about in 2020 and the 2020s decade in general?
Dakin.
Yeah, I mean, there's so much to be excited about in 2020. I think there are all these technologies, some of which have been talked about for 5 years, 10 years, 20 years, even 30 years, that are converging. You know, it's funny that Peter switched his background over to Singularity University. He's been teaching the world about a lot of these technologies for some period of time, and they're actually happening here today and now. You know,
Finally.
whether it's space like we talked about, or it's particular forms of energy technology that make it possible to just have unlimited quantities of energy, or atomically precise manufacturing. I mean, the list of things that are like realities in the next 10 years that people who aren't paying attention to this think are 50 years from now or 100 years from now, it's mind blowing. And I just think the world in some ways is going to be almost unrecognizable a decade from now, for people who haven't spent their time immersed in thinking about what does exponential progress look like, what does exponential change look like, and we're on the cusp of this massive acceleration.
Timur?
So I have I mean, to add to that, because I've lived through quite a few cycles, I would say the last 30 years were the time and the world of information technology. The next 30 years are the time of biotech, but in a much broader sense, biotech and bioinformatics. I mean, from the day that we sequenced the genome, we all of a sudden opened a brand new world, which is what the next 30 years are going to be about. And it's the confluence of a number of technologies, but in particular, it's the confluence of information technology with biology. And that's going to just have a direct impact on all of us, because it will impact our health, it will impact our longevity, it will impact everything. And so in that sense, we truly will be entering a new renaissance for us as human beings, in my opinion, at least.
So Courtney, do you want to add anything there? Or I have a final question to ask everybody to go around. Do anything there, Courtney?
No, please.
So I'd love as we close out here in the hour, your heartfelt final advice to entrepreneurs watching us in general, whether it's from a venture investing side or just advice for entrepreneurs. Timur, you want to kick us off? Actually, Courtney, you didn't talk. So Courtney, kick us off. Go to Timur, Dakin, and then I'll close out here. Courtney, please.
Sure. I think my advice simply would just be to, as Peter's name connotes, just be a little bold. I mean, it's the time to do that. And I think, you know, we live in a world where I'm shocked how many people find a way to get to people if they want to. It's not hard to get Tim Cook's email address. It's hard to get him to reply. Trust me, I know I've only tried a few times, but 0 for 3 or so. But it's because I didn't have a compelling reason. And so if you have a compelling reason to get in touch with Peter or myself or anyone here, I have a soft spot for someone who just keeps being persistent and finds a way to make it happen. I sometimes get an email and I go, I don't know this person. It's a cold email and I'm curious, will they follow up? You know, I think life is 10% what happens, even 90% how you follow up on it. And so I'll just put this email and I'll just delete the first one and go, I just want to see if that person follows up. I'm shocked how often they don't. And if they just did it once or twice more, I would take that meeting, or I would take that call or take that chance.
Nice. Timur.
So I remember the first time I was fundraising for my first fund, which was in the, I don't know, 25, 30 years ago. And I was pitching Harvard University, their endowment. And I went in with this story that now is the right time to invest in venture capital because whatever, I had some story. And the guy turns around and looks at me and says, well, what are you talking about? And I said, well, you know, here are the 50 reasons why it's really great. He said, that's ridiculous. You're either in the venture business, in up cycles, down cycles, it doesn't matter. Every industry will have cycles. And so I think the flip side of that is, if you're passionate, if you believe in something, COVID, not COVID, There's a lot of money. There isn't a lot of money. Go for it.
Nice. Dakin.
Yeah, I'm gonna quote one of our all of our partners, Tony Robbins. Life is really about who you become and what you give, and entrepreneurship is kind of the ultimate opportunity to accelerate what you become, because you run into a lot of roadblocks building companies, and you have to find parts of yourself that you didn't know were there. You have to expand, you have to grow. And it only works if you add more value to people than they're adding to you. It only works if you're really giving something that's huge, and you have to be pulled by that vision of what it is that you're giving. So I think if those things call to you, this is always a great time, like Timur is saying, to be an entrepreneur. And if those don't, that's fine too. There's a lot of great entrepreneurs out there. Collaborate with them, help them to realize their visions.
So guys, that's great. I'll add just a tiny bit to say, in addition to what we're saying, being an entrepreneur is a form of artistry. It's making the world a better place. It's finding a problem and solving a problem. And life is also who you go through life with, right? So being an entrepreneur, it's a chance to create a network of friends, of colleagues with which you build something that hopefully is meaningful for you, that's part of your massively transformative purpose. So I think entrepreneurship is one of the highest forms of creativity. There's plenty of capital out there, guys. It may be slow for a little bit. It'll come back. Make sure this is a great time to hone your ideas. And as Timur said, of 2008, we've had incredible companies. Really be clear that you're not doing it to make money. You're doing it because you are passionate about solving a problem or creating an opportunity on the planet. Dakin, Courtney, Timur, grateful for your Sunday afternoon time. I hope we inspire someone out there to go take some great moonshots and change the world. Thank you, everybody. Have a beautiful Sunday. Be safe. Have fun.
Okay. Thank you, Peter.
Thank you all.